So, in the quarterly financial release, the company updated their net interest margin, which is an important figure for banks and lending companies, I should say, and banks. So, the company saying that for the second quarter, the net interest margin came in at 5.86%, which is higher than the 5.83% in the same quarter last year. But still, the risk remains if people experience financial trouble and they're unable to pay, then it doesn't matter what their credit score is. If they lost their job and they're unable to pay, they're not going to pay, right? So it's just, when someone has a high credit score, if they had a long history of credit, they probably know how to manage their finances. But sometimes a 19-year-old can have a really high credit score. And SoFi sometimes boasts that they seek out individuals with a credit score of 750 or whatever. But if they're 19 years old, what does it matter if they have a credit score of 750, right? With what, 1 year of credit history, maybe 2 years of credit history? That's not a high quality borrower, in my opinion. There isn't enough credit history there to determine if that's a high quality borrower. And so, uh, I would caution investors when SoFi, they like to report that a lot in their conference call with Wall Street analysts and investors. They like to point to the fact that they go after very high credit score borrowers, and they like to report that score 750 or whatever the average score is, which is a high credit score. But I've seen 18, 19 year olds that have credit scores above 700, close to 800, because they have 6 months of credit history and they've made all their payments on time, and they have 3 credit cards, and they practice good habits. But still, they're just 19 or 18. That's not enough history to determine if they're a good credit risk or not. So this fact on its balance sheet, in conjunction with the other fact that they're making a significantly increasing percentage of personal loans on behalf of third parties, where they don't have to take that risk of default, is very positive for SoFi stock investors. It was one of the reasons why the stock price exploded higher following the earnings release. And then, of course, when they announced the stock sale, the stock price declined. If you want to learn more about that stock sale and the decline, why that happened, I have a video that talks about that. I'll link to at the end of this one. Click the link below to watch the full video.